Hello, and thanks for joining us today for ACI Learning's audit webinar. Have a question? Use the GoToWebinar question box and we will answer as many as we can at the end. Now let's get started.
Hello and welcome to the ACI Learning's webinar series. I'm so glad you've joined us today. Today our presenter Jamal Ahmad will explain how to curb fraud risks using data analytics alongside Dr. Hernan Murdoch, ACI Learning audit instructor. Jamal Ahmad is a forensic accountant, auditor, legal and compliance professional with over 20 years of experience in conducting forensic accounting investigations and consulting on fraud prevention and detection, risk assessments, third-party risk management, and internal controls to clients and their stakeholders. In addition to his work experience, Mr. Ahmad is a published author and a speaker, having authored several articles on matters involving forensic accounting and compliance issues. Mr. Ahmad also teaches forensic accounting at the undergraduate and graduate levels at the John Jay College of Criminal Justice's School of Public Management. Dr. Hernan Murdoch speaks at conferences in the U.S. and abroad and has authored numerous articles and books on a variety of topics including internal audit, fraud, and more. He holds professional designations as a certified internal auditor and is certified in risk management assurance. He currently serves as the VP of Audit Content at ACI Learning. So what exactly is ACI Learning? ACI Learning trains leaders in cybersecurity, audit, and information technology, delivering lifetime learning to over 250,000 engaged students, professionals, and organizations across 6 continents. Many of you attending today may know or have heard of the MIS Training Institute, or MISTI. MISTI has been training auditors, risk and compliance, fraud, and information security professionals worldwide for over 40 years. Well, MISTI is now part of and is being rebranded as ACI Learning. Check us out at acilearning.com and follow us on your favorite social media. All right, we'd love to get questions from you as we go along, so please put your questions in the questions panel and GoToWebinar on the right side of your screen. We'll be sure to get your questions in the presentation. This webinar is being recorded, and a link to the recording will be sent to you within a week. You can also download today's slides and any additional handouts by clicking on the links in the Handouts panel. All right, now let's welcome in Jamal and Hernan to today's webinar. Hey guys, thank you so much for joining us.
Great, wonderful. Welcome, Jamal. How are you? It's so great to be here and talk about this very, very important topic. And I'm very curious about how we can go about leveraging the power of data analytics to help us better detect fraud. So where should we begin?
First of all, thank you for having me. It's a pleasure to speak here on this topic. It's a topic I'm very interested and very passionate about. So I appreciate the opportunity to talk about it. I think any topic, any discussion on data analytics and how it can be used in fraud has to first begin with what is data analytics? What do we mean by the term data analytics? I think it gets thrown around a lot, and maybe in some instances without a full appreciation or understanding of what it is. But very simply, data analytics is the analysis of large volumes of data for the purpose of identifying trends, anomalies, patterns, or red flags in that data. Now, how does that get used in fraud detection? Well, as it applies to fraud investigation or fraud examination, data analysis is obviously then the analysis of large volumes of data of financial and non-financial data, I should say, to identify questionable transactions or transactions that might be indicative of fraud. Now, there's a lot of tools and there's a lot of ways that we can use data analytics, and there's a lot of platforms out there that purport to use data analytics to help the practitioner identify fraud. There's ACL, SQL has a good platform, but one of the most overlooked platforms that you can use to detect fraud is very simply Microsoft Excel, which comes in, if you have Microsoft Office if you have a PC, it comes pretty much standard on any PC. Excel has a lot of different functions and features that, although not originally intended to to be designed to identify fraud, they can be used for that purpose. So Excel is a good starting point if you lack any of the other more sophisticated platforms to identify fraud. So the next question is, why is data analytics so important for fraud, or so helpful for fraud detection? And what makes data analytics a good use or a good methodology for fraud detection? Well, at the very basic response to that is that data analytics allows us to, or allows the practitioner to review a full population of data very quickly. Traditional audit sampling methodologies are not effective for fraud detection purposes. In the traditional audit sampling methodology, you're obviously just taking a subset of data, reviewing that data, and then extrapolating the results of that review to the entire population. Well, that's not really effective for fraud. That's like, because in fraud, you're looking for the needle in the haystack. So a data analytics, by using the computer to identify questionable transactions or fraudulent transactions, allows the practitioner to look at an entire set of data over a short period of time. And it also, because you're not using sampling methodologies, it also decreases the risk of sampling error that occurs when you use sampling. Another reason why data analytics is so effective for fraud detection is that data analytics, a good data analytics platform or program, allows you to look at data from a variety of sources. And I'm going to, in a couple of seconds, I'm going to talk about the different types of sources that we can leverage for data analytics reviews. But using data, if you're using a good data analytics platform, you could get a holistic view of your entire data set to make a really informed decision about whether or not there's fraud is existing in your program or not. Another reason why data analytics is so good, is so effective, is because by using it in real time, using data analytics in real time and incorporating that into your program, you can identify fraudulent transactions before they become material to the organization, right? Before they become too large, or before they become of such a magnitude that you'll never recover from them, or that maybe they require disclosure in your financial statements if you're a public company. Another reason why fraud detection is so effective, or why data analytics is so effective, is that it really allows you to focus on suspicious transactions, not just transactions that are not suspicious, but you review them because they fall and you did some sort of random sample. Now you have to look at that transaction. Data analytics, because it allows you to focus in on transactions that are truly suspicious for some reason. Okay, and that increases profitability and productivity of your team. Okay, so it increases productivity of your team, which therefore increases profitability for the organization. The fourth reason why data analytics is important to incorporate into your program is because it also allows you to evaluate your internal controls, to see whether they've been designed appropriately and whether they've been whether they're operating as they're designed to be operating. Even if you look at a transaction that is potentially fraudulent and it turns out to be not fraudulent, it doesn't mean that some of your internal control policies or procedures were not violated during the course of that transaction. So, having data analytics allows you to simultaneously perform internal control reviews, and then you can see which one of your controls are operating effectively. And then perhaps the most important reason why data analytics should be incorporated into a fraud detection process is because data analytics testing is now required by the Department of Justice. In its most recent guidance issued in June of 2020, the Department of Justice came out and emphasized that that they will be considering a company's data analytics testing program as part of its overall compliance program. So if something happens in your organization and you're confronted and you have to go in front of the DOJ, one of the things that they're going to be looking for, and one of the things that they're going to ask you is, do you have a data analytics testing program as part of your compliance program? And if you do, hopefully that will curry some favor with them, and it can score you some points and perhaps lead to a reduction in any potential fine or penalty you may have to pay.
So Jamal, as we're highlighting all of these different benefits of data analytics, it appears that you're touching on a lot of different things at the same time in terms of compliance, operations, fraud, early identification, and to your point in terms of how fraud in many cases starts small and then becomes larger over time as the fraudster becomes either greedier or bolder in their actions. So intervening early, identifying the problem, looking at suspicious transactions, which again is consistent with risk-based auditing, it definitely touches on a lot of the different things that auditors have been trying to focus on for a long time. So it looks like there are a lot of positives here. One thing that I also would like you to expand a little bit before we move on is in terms of the trend of companies to become more digital. They're digitizing so many things, right? Everything is getting captured now in databases. This will become a major enabler. And of course, with the lower cost of the tools, you mentioned Excel and a few others. So there's more data, lower cost of the tools to dig through, mine through the data. All of these things are converging. So it seems to me like this is an ideal time for this conversation to take place.
Absolutely. I mean, and if you're a practitioner, whether you're an auditor or a fraud examiner, such as myself, you recognize the importance of having tools. Data is getting more, as you mentioned, correctly mentioned, more companies are housing more and more data or generating more and more data now. Whether that's operational data or compliance data. So it's becoming all the more important to have the tools to be able to effectively capture this data, organize this data, and then make some sense of it for whatever purpose it is that you're intending to do, whether that's compliance or operational effectiveness.
Very good. So as we continue to talk in terms of how we can get in front of the problem and be proactive as relates to fraud, let's talk a bit about that perspective of it, because historically, auditors and investigators, and by definition, they have usually come in after the fact, try to reconstruct events and find out what happened. What we're talking about in many ways is getting in front of it and being proactive. So how can we take on that aspect of it?
So one of the ways that data analytics should be a subset or a part of your overall fraud detection program or process. And if incorporated into your process, data analytics can help a lot. So data analytics can be used in a reactive situation, in an audit or investigation, or it can be used proactively, as you just mentioned. And it's more effective if it's used proactively, if it's integrated into your existing systems to perform real-time analysis of the data that's running through those systems. So the way that a fraud examiner or an auditor can incorporate data analytics into the fraud detection process is, first they have to gain an understanding of what the company, gain an understanding of the company itself and the industry in which it operates. By gaining a baseline understanding of the company and the industry in which it operates, then you begin to get you'll be able to understand what type of fraud schemes are out there that the company could be subject to. So you should be able to begin to develop and build a library or a database of possible fraud schemes, and then also red flags that would be in the data that might be able to help you indicate those, determine whether those schemes are existing. So once you've done that, then what you have to do is you have to identify what data is out there that internally to the company or externally that might be able to help you identify those fraud schemes. What data does the company have? Now, as a practitioner, I can tell you more often than not, that data is the accounting system for me. So, but that doesn't mean that that's going to be that's the universe of data that a company has that you can look to. There's other systems out there that a company will have that can also help you identify fraud, and we'll talk about what those are in a couple of seconds. Then once you identify the appropriate and relevant data sources, you need to be able to start developing tests to what sort of tests can I perform on that data that is going to help me identify fraud schemes. And after you perform those tests and you run those tests up against the data, which is the data analytics component of this, then you can now apply more what we call the substantive procedures to the results of those tests. The substantive procedures being interviewing people, reviewing documents, talking about the transactions that were highlighted as a result of the data analytics as potentially fraudulent, and then trying to get to the bottom of those to see if those were in fact truly fraudulent or not.
So
So
as far as looking at this process, Jamal, it seems to me like part of this is also an exercise in imagination, in the sense that, and I believe that's the second step in your process, where you talk about different schemes, and some of those are widely discussed among auditors and fraud investigators. But I would imagine that it may vary a little bit by industry, looking at what are some common schemes that apply in utilities, in retail, in manufacturing, in healthcare, and so on, and then building a database within your organization so that you can then use that, not as the only resource, but of course as a growing database, a living document that you continue to use and then apply it to large data sets. That way you can tailor it to your organizations and his history, his direction, and what's happening in the company and the industry. Would you say that that is probably one of the things as far as how we develop this database of schemes?
absolutely, and I think the for the auditors in our audience today, the appropriate term, I think the term that they're familiar with is brainstorming, right? At the beginning of every audit, you're supposed to brainstorm about, a lot of things that could affect the audit. And one of the things that you're supposed to brainstorm about is how could the organization or the audited entity be at the risk of fraud? What sort of fraud risk is there that could exist within the entity? And you would do the same thing as a fraud practitioner or a fraud examiner coming in to do a fraud risk assessment for an organization, whether you're internal to the organization or external. What sort of fraud risks are out there that this entity could be subject to, and then and you're right. Then you would, once you have that, you do that conduct that brainstorming session. Then you start to build your library, your database, and that database, just like any other assessment, or along with just as you're supposed to conduct a fraud risk assessment at least annually, or more so, depending on what type of industry you're in, you should be updating that database to incorporate changes in business processes or changes in fraud schemes that might be out there. So it's an ongoing process.
Okay. Yes. One of the things that when we're talking about this, and you started early on talking about data and having data, right? And we spoke a bit about the increased amount of it that exists in our world these days, and companies are gathering more of that every day. So, what are some of the different ways that we can categorize data, and what does that do for us as we try to navigate this process?
So there's two types of data that companies typically have, or companies can have in their organization. There's structured data, and then there's unstructured data. Structured data being data, any type of data that's housed in a structured database, right? When we talk about a structured database, we're talking about something that looks like an Excel spreadsheet with rows and columns. So types of structured data that exist out there is data in your financial records, data in your accounting system, payroll records, time and expense records that you have for your employees. All that is typically in some sort of system, and that's in a structured format. So that's structured data. But most data and actually before I go on to unstructured data, most common fraud examination techniques focus on structured data or information in structured databases, so that they don't focus on unstructured data. But I read an article recently somewhere that said that most data in an organization is in unstructured format. It's not in structured format, it's in unstructured format. And what do we mean by unstructured format? Unstructured data is data that is in emails, text, internal messaging systems, any sort of documentation that the company generates. There may be their bylaws, their board of director meeting notes, all that type of information. That's all in unstructured format, meaning that it's not in some sort of structured database where that's easily searchable. So most of the company's data is in unstructured format. Because fraud examiners and auditors don't focus on testing unstructured data, typically, because they haven't had, historically, programs out there haven't been able to effectively search unstructured data formats. So you can imagine that there might be a lot of fraud in that unstructured data that gets missed. With data analytics, now the technology is progressing so that data analytics can look at structured data and unstructured data and combine it, and to give you what I referred to earlier, that holistic view of what's really going on in an organization from a fraud perspective, from a fraud risk perspective, so that you can consider all that the structured data and the unstructured data in making it and getting an informed decision about whether fraud truly exists. So
I would imagine, Jamal, that some of it also is going to connect the dots to the extent that, for example, you have, let's say, an exchange of emails where you have two individuals maybe working through a scheme to do something or make payments, accept payments, process kickbacks or something along those lines. And then also perhaps look at phone records or text messages that are going through the company network, and then start to build that those linkages that will then indicate that, yes, we have the emails that show the interaction, we have the text messages that confirm time and place, we have the accounting records that also show what the amount was, and all of these amounts and dates and times and individuals tied together. So I would imagine that it's not just a one-off piece, but in some cases we are looking at the power of technology to connect the dots. Is that correct?
absolutely, and the technology is getting they can actually connect the dots better in some cases than a human can, because they'll find little things that might be missed from a human eye, and they can do. And as I mentioned before, the technology can do it at a faster rate than a human can. So yes, but looking at varied data sources and connecting dots is definitely where the technology is headed, and that varied data may be in structured or unstructured format, or it may come from different sources. So some of the more common sources of data that can be used for data analytics purposes are, uh, as I mentioned before, for me as an accountant, as a forensic accountant, more often than not, I will be using the accounting system, the company's ERP, to look for fraudulent transactions. But that doesn't mean I'm going to stop there. I'm also going to look at, if the case calls for it, I will look at the customers or the company's customer relationship system, their third-party vendor system, okay, their employee system. Also, these are all different areas where data can be housed, relevant data can be housed, that can be extracted for data analytics purposes. And then the more data that you have that the machine can effectively look at, the better your analytics process will be. So
as you're talking about all of these different sources, one that comes to mind and is probably embedded in some of these, but it's interesting because one fraud that we identified and then investigated subsequently had to do with a fleet management operation. They had a fleet of vehicles, and they were basically buying car parts and fuel and tires and oil changes and brake pads and various things like those. And a lot of that was basically, we detected it and then investigated based on information in a fleet management piece of software. And then from there, we were able to identify what the issues were. So you were sharing just now in terms of the, again, CRM and the vendor management and HR and so on. There are so many sources out there. We go back to what we were discussing earlier in terms of brainstorming, understanding your organization, and having a sense about what kind of data is being captured and where is it housed. So have you also seen some of these things in these, let's call it, unusual places?
oh, absolutely. I mean, I've done a number of investigations where, you know, and I said this, maybe it was a little bit, I was a little bit too quick in saying it, but I said that as a forensic accountant, I'm typically looking at the accounting system, but the accounting system, a lot of times the accounting system is just showing you the end part of the transaction, which is the payment, right? But the fraud may not necessarily be housed in the payment. The fraud might be housed in the rebate or the discount that you gave to the customer, which resulted in a lower payment. So that rebate or that discount that might be in another system, as you alluded to, or that rebate or that discount might be offered to a customer through an email or through an internal chat. So this is just highlighting the importance of being able to look at all these different systems, connect the dots, as you correctly mentioned previously, connect the dots and to put the transaction together to really get a holistic view, a full view of what's going on in that transaction, and then being able to identify fraud. By looking at just the payment, you might not identify the fraud because it would just look like a standard and an ordinary payment.
Jamal, another thing that comes to mind is as we educate ourselves, of course, like we are now, but as we educate our clients too and the individuals within the organization, helping them understand the kind of work that we are doing and why we look for certain things. And what comes to mind is when we request data or request access to a system to be able to look through that those records, sometimes they ask, well, why do you need access to that? And what's the purpose of this? It's probably helpful for us to be able to articulate some of the things that you're highlighting and be able to say, well, the reason we're looking at this is because these are some of the potential risk and fraud schemes that we're exploring and looking into so that they understand the purpose of this. But this goes back to awareness. This goes back to imagination and brainstorming because, like you said, and like I was highlighting as well, there are so many unusual places where the fraudulent behavior activities may be captured and they're indicative of something that is going on. But if you were just waiting and looking in the accounting records, you may not ever see it, or may see it too late.
Right. And I think, speaking from experience, I can tell you as an auditor, former auditor, and a forensic investigator now, I can tell you when you go in to do an investigation or an audit, clients are, they obviously they understand the need for what you're doing in most cases, but they also look at you as, you're a bit of a nuisance, right? Because you're asking for information, you're disrupting their daily routine, whatever it is they need to get done as part of their job. So you're saying to them, okay, I need, I'm here to do this, my job, and I need this information, and I need information, or tell me about first tell me about the systems you have and that house this and where the data is, and then I need you to pull data from these different types of sources, and then perhaps help me understand that data, walk me through what I'm looking at. So it becomes a bit of a nuisance for them because then they now have to set aside time to help you sort of understand it. But at the same time, you need to get that access to that, in order for you to be able to do your job. So it's a bit of a conundrum that we have as forensic investigators and auditors. We're there to help the client, but at the same time, we're hindering them in their day-to-day routine.
I think it helps if we have this conversation during the planning phase and when we are doing the kickoff during field work to help them understand the scope of the work that we do, number one. But another thing that comes to mind is again, going back to the standards. And it talks about auditors looking for the indicators of fraud. So this begs for a proactive approach to it and us at the same time also explaining to our clients what we do and why we do and what's the benefit to the organization. What you highlighted earlier, I think, is very helpful in that case, because if we can explain to them that early identification of anomalies is in everybody's interest and then talk about the procedures that will help us accomplish this, I think they'll probably understand better and be more supportive. With that said, though, can we talk a bit about some of the indicators? What are some of the different data analytics tests that we may be able to perform? And that way we'll start to get maybe a running start on that database we spoke about earlier.
Sure. Yeah. So as I mentioned, data analytics can be used. Using data analytics, appropriately using data analytics, you can develop a whole litany of tests to help to be able to identify suspicious transactions. And I'm not going to go through all the items that are going to be listed on this screen, but basically, one of the benefits of data analytics is that it helps you identify outlier data, anomalies, right? Things that are appear to be deviations from the norm. And whatever you define the norm, you working with the client can help you work to identify what the normal behavior is or the normal transactional pattern is. And then the data analytics helps you identify deviations from that. So, if revenue is increasing 2% every year, then all of a sudden, or 2% every quarter, and then in the last quarter, revenue jumps 10%. Well, that's a good thing, obviously, and it doesn't have to be necessarily fraud, but it's something that's a deviation from the norm, right? So data analytics can help you identify that. And there's lots of different tests that can be performed, or methodologies that can be used to identify outlier data, such as regression analyses or clustering, k-means clustering programs, right? So that's some of the ways that data analytics can be used. Data analytics can also be used to identify transactions with specific characteristics. Maybe transactions with round dollar amounts. Those are typically unusual transactions. I've done a number of different bribery investigations in my career. And one of the things that we always look for when we're trying to, one of the tests that we always perform when we're looking for potential bribe payments in an organization is we look for round dollar amounts, because bribes are typically, or most often they're not, paid in round dollar amounts or round dollar increments. So data analytics can help in that regard. Transactions above or below certain thresholds, right? If you're looking to see whether somebody is exceeding their authorized threshold, or then you could use data analytics to look for those. If you're looking to see if someone is just looking to skirt threshold rules by approving transactions just under a threshold, data analytics can help with that as well. So, there's a whole different litany of tests that you can perform, whatever your imagination can think of during the brainstorming session about how fraud can be accomplished in the organization or achieved in the organization. Then, if you have the appropriate data for it, you can you should be able to design a test for the and be able to look for whatever it is that you think is happening in the organization.
Now, one thing that comes to mind, Jamal, is that with these tests, you mentioned here 8 of those, and of course there are many others. It's just a matter of us brainstorming and building that list further. But one of the things that comes to mind is not only the list of unique tests, but also the fact that these things can also be built in such a way that they can be recurring tests. So from that perspective, we can think of it as, okay, I'm doing this particular audit. I am going to look for these particular things, but this is just my audit and this is my scope today. There could be another business unit, another product line, another geographic location, another functional unit, and maybe this particular test I can perform again. So when you're talking about round number transactions, when you should have a variety of odd numbers, well, that could be run here for this particular audit, but maybe something can be run for another unit and another unit, another unit. So that script or that procedure can be multiplied and used in different contexts as well. So we have multiple uses for that investment of effort, correct?
Correct. And you're absolutely 100% correct. And one thing I also want to add to that is that these tests, I mentioned this 5 minutes ago, but that these tests can be, if used correctly, if data analytics is used appropriately, these tests should be performed in real time. Right? You're not waiting to perform these tests a month after the books close, or when the transaction is already out, the payment is already out the door. You should be performing these tests. If you should be incorporating data analytics and integrating those into your existing systems, whether that's the accounting system or the payroll system or whatever. You should be incorporating these data analytics tests into the existing system so that these tests are being performed in real time. And the advantage of that is that you're getting to identify these potentially suspicious transactions almost instantaneously. And then nothing is going to be 100% instantaneous, but simultaneously when those transactions are occurring, or maybe a fairly short time after the transaction occurs, so that you can get ahead of it and maybe put a stop payment on that check before it goes out, or before the fraud gets too big. So that's the real advantage of the data analytics tests.
That's wonderful. Yes, that's great. Great advice.
There's also, I want to spend a few minutes actually also talking about other areas of data analytics, or where the data analytics is heading in the future. We've spent a good deal, I've spent a bit of time talking about how, and I think most people think about data analytics, when they think about data analytics, they think about it in terms of looking at numbers to identify transactions. But there's a lot of work that's being done with data analytics around language, okay, and using data analytics to identify fraud in language and conversation. And what that means, the term for that is sentiment analysis, right? And sentiment analysis is the process, generally speaking, sentiment analysis is the process of detecting positive or negative sentiment in text. And that is done through techniques like natural language processing or text mining. Okay, so your companies use sentiment analysis to help them monitor their brand and to look at customer feedback and to understand customer needs. But sentiment analysis can also be used to detect fraud by focusing in on keywords that might be indicative of fraud, and also focusing in on tone of conversation. So if you look at it in the terms of the fraud triangle, which hopefully, yeah, I'm sure many of us are aware of. What is a fraud triangle? The fraud triangle are factors that that if they exist in the organization, could be potentially indicative of fraud. And so what you do, what the sentiment analysis tries to do is the sentiment analysis tries to look for indicators of the various legs of the fraud triangle in conversation. So in emails, are there conversations going through that are indicative of of incentive or pressures being in the organization? So are there words like meeting the deadline? We have to meet the deadline. We have to make sales quotas. We're under the gun here. Now that, like any other sort of transaction that gets flagged, that doesn't, if there's an email or a chat going on where that conversation is taking place using those words, it doesn't necessarily mean that the organization is committing fraud or the individuals in the organization are committing fraud. But it could be that could be a red flag that fraud is being committed, right? So sentiment analysis, the way the technology is advancing is it's looking for using tools like natural language processing, text mining, to go through and identify whether there are situations in the organization that could be indicative of fraud and putting them in the context of the fraud triangle. So just to hammer the example a little bit more, are there conversations where they're talking about opportunities to commit fraud? Or are there conversations where where someone is appearing to rationalize fraudulent behavior? So that's where, that's the next step, I think, in data analytics, and again, using the sentiment analysis and the results of the sentiment analysis, we can now then combine that with the results of the data analytics that are taking place in the structured data and the accounting system to help us paint a picture as to whether fraud is occurring in the organization. So if I see someone is talking about a transaction, maybe there are two salespeople that are where the sentiment analysis indicates that fraud might be going on. Now I can look to see. Let me focus in on the sales transactions that were originated by those two salespeople. Do those sales transactions have some sort of possess attributes that could indicate fraud, that there's fraud going on? Maybe they're giving greater discounts than they're allowed to their customers, something like that. So you have to be able to, again, it goes back to looking at using the results of the various data sources, okay, and then connecting the dots and painting a picture or a mosaic to see if fraudulent behavior is truly does exist or not.
As you were describing this, Jamal, I was thinking about some of the different dynamics that sometimes we hear about, we experience. And for example, I'm thinking about corruption, to be more specific. And one of the things that happen with bribery payments, for example, is everybody does it. Or to do business here, you have to pay bribes, or you have to give something to someone, or a little something to this person, and so on. So these kinds of expressions and statements, I've always thought of those as indicative of how people rationalize. And it's interesting that you brought that up and explained so clearly how that becomes something that we can actually explore in the conversations, in the scripts, in the text, and be able to find those dynamics. So that's definitely very insightful. And knowing that the technology is there to do that, that is definitely very powerful.
Yeah, I mean, I would, in full disclosure, I'll tell you that the technology is still probably in its early stages right now. It's there. It could definitely be better. But that's where we're headed. And so you have to be able to leverage that. At least having as a practitioner, an auditor or a fraud examiner, you should at least be aware that technology exists. Even if it's in nascent format, but that so that the possibility exists for you to be able to leverage that. And just as an aside, by the way, you mentioned the excuse that everybody does it in the context of a bribe. the government doesn't care about that, right? They're if you get in trouble with the Department of Justice and you say, and your excuse is, your defense is everybody does it, that's not going to fly. So you have to be able to identify that fraud.
Excellent. Yes, great, great there. Okay, so let's do this. How about we talk about some of the potential challenges, right? We've talked about a lot of the upside, the benefits, the arguments for, but we are fair and we're balanced, and we need to also give some time and space to the challenges and make sure our viewers also are aware of some of the things they need to anticipate and be prepared to address to make sure that all of these benefits can be realized, or at least the majority of them. So, what are some of the potential challenges that we can encounter as we try to move in that direction?
Sure. So, I mean, I think we all agree, or hopefully we all agree by now, that if not, then I'm not doing a good job but I'm presenting. But hopefully we all agree now that data analytics is, or hopefully we all see that data analytics is an effective component or an effective tool in the fraud detection process, right? But that doesn't mean that data analytics is perfect, right? Data analytics, like any other process, has to be implemented appropriately for it to work. And there are challenges that are associated not only with reviewing data appropriately, but also with from the get-go in identifying and extracting data for you to, as a practitioner, to be able to review. So, I think the first and foremost challenge that you encounter is, as a practitioner, when you do your brainstorming, is the first problem is you have to be able to identify what relevant data is there for me to be able to review, right? If an organization doesn't have any relevant data, or as you mentioned before, if that they have the data, but it's not in electronic format, if it's all in manual and paper format, then your data analytics is off to a rough start, because now first you have to convert that to an electronic format, and then hopefully it comes out right, and then or in a format that you can review, then you can be able to perform your tests. But if there's nothing in digital format to begin with, then you're already behind the eight ball from the start, right? The second challenge that organizations or practitioners have is when it comes to data quality. Do we have data that's in quality format for me to review? I can tell you from experience that I've gone into a lot of organizations where one is either they don't have the data in electronic format, so we first have to convert it to electronic format, and then and you usually do that by scanning, and the scanning process is not always the best or the greatest, so the data comes out in poor quality. Okay. Or the data that you get from the organization, the system doesn't lend itself to extracting data very, very well, whatever system it is that we're looking at. So you get poor quality data. So there's that saying, garbage in, garbage out, right? So if you're getting garbage data to look at, your analytics or any analytics that you perform are going to be of not good quality, and maybe probably not even, they may not even be worth the time in undertaking if the data quality is not good. So that's another challenge that you often have to overcome when extracting data from, particularly from disparate systems or varied systems, because the thing that you have to remember is a lot of these systems were not designed originally intended to be designed to be looked at with the fraud examiner in mind or with an auditor in mind, right? They were designed with a particular purpose in mind, which is to help the company accomplish some sort of business process, not necessarily for an auditor to look at. So you have to be wary about that. Another challenge that we typically face as practitioners when it comes to looking at working with companies is volume of data. Does the company have a sufficient volume of data for us to look at? If you're trying to find fraud, but the company only has 6 months worth of electronic data for you, that's really not an appropriate amount of data for you to go back and try to find fraud and make an opinion as to whether fraud is there or not, right? Or so the company should have a sufficient volume of data in order for you to be able to go and see if fraud is occurring. Also, when it comes to things like we talk about machine learning, right? Machine learning is when the platform that you have to detect fraud takes existing transaction and learns from the attributes of those transactions or the characteristics of those transactions, and then tries to identify fraudulent behavior in other transactions based on what the machine has seen. That's called machine learning. So as the more transactions the machine sees, the smarter it gets, right? But for machine learning to be really effective as a data in a data analytics setting, okay, it has to typically take 6 to 12, it has to see 6 to 12 months worth of data for a machine learning to take effect or to be effective. So, not having that volume of data because, maybe you just started incorporating data analytics or you didn't have electronic data to begin with, that's really going to hinder your machine learning abilities or the system's machine learning capabilities. Again, data is not in the proper format. That's another problem that we often see. A lot of times companies will tell me, "Oh, I do have electronic data," but that electronic data consists of a PDF file. A PDF file is essentially, yeah, you can scan a PDF, you can look, you can search a PDF file, but that's almost like looking at paper in a sense. The real benefit of data analytics is putting something into a huge database and then running queries on that database. You can't really do that so much well, with the PDF file, and you definitely can't do it with paper format, obviously. So a lot of systems these days have the ability to download into Excel format or into what we call a CSV format, a flat file. So that's great because once you have it in an Excel format or a CSV format, now you can convert that. You can use Excel to to run data analytics on, and Excel will also work with a CSV or a flat file. Or you can incorporate that Excel file or a CSV file into some other sort of platform or database and perform more sophisticated queries on that. So data format, having the data in the right format for you to be able to review is very important for getting the most out of your data analytics component. Another challenge that we typically see, and this is probably the biggest complaint that we as practitioners have, is this concept of false positives, right? False positives are, when you have a transaction that gets flagged as potentially fraudulent when in fact it's not fraudulent, but it gets flagged because it's exhibiting some sort of characteristic or attribute that makes it look like it could be a fraudulent transaction. So maybe it's a transaction like a round dollar number that is gets flagged because it's a round dollar number, but in reality it was really a round dollar. It was really a payment out there that was a round dollar number. So, these are unfortunately false positives are going to be a part of the data analytics process. You're going to get, the platforms are trying to get better at eliminating false positives. And one of the ways that, platforms are trying to eliminate false positives is through this machine learning process. So in other words, if you have transactions that, let's say you have a transaction that is occurring on a weekend, okay, now, and the company's typically not open on a weekend. So that would, in a normal setting, that would probably get flagged as a potentially fraudulent transaction because it's a transaction that's occurring on a day when no one's in the office. But let's say the company looks at that transaction and says, oh, that's actually not a fraudulent transaction. That's a payment to the landlord, and it goes out automatically on the first on the first Saturday of every month. So that shouldn't get flagged. So now that becomes so now you can program the machine to tell it that if you see a payment to the landlord, to let's say it's landlord X, even if that occurs on the weekend, that shouldn't get flagged, right? So that, and hopefully that through machine learning, that the machine will learn no longer to flag that transaction. So that's one way of, machine learning is one way of trying to eliminate false positives, but you're never going to eliminate false positives 100%. And depending on the platform, the quality of the platform and the data analytics program that you have, that's going to increase or decrease the amount of false positives you have. And the problem with the false positive is, of course, somebody has to now, once the transaction gets flagged, somebody has to go chase it down and to determine whether it's really a fraudulent transaction or not. So it wastes time, it decreases productivity. But it's a reality of life with data analytics, and you're never going to get around it 100%. And then the final two challenges I think that you have in incorporating data analytics in your program is, and these two go hand in hand, is this concept of, things change. Nothing, organizations are dynamic, right? And so business processes change all the time. Operations change all the time. So your data analytics program should account for changes in your operations and your policies and your procedures that go along with the changes in those operations. So if you're looking for transactions if your data analytics program is looking for transactions that are greater than and flagging transactions that are greater than 5,000, now as let's say that the size of your company is growing, okay, now you're making hundreds of millions of dollars of revenue, you're probably going to want to increase that level of that threshold level from 5,000 to maybe looking at transactions greater than 10,000, for instance. So you have to be able to your data analytics program should be nimble enough and flexible enough to account for and consider and changes in your business practices and your processes and your operations and move with those operations and grow with them. Another problem that often related to that often hinders data analytics programs is evolving fraud schemes, right? So nothing, just as companies don't stay the same, fraudsters don't stay the same either, right? The people who commit fraud are always looking to get ahead of and find the next way to steal money from a company or commit fraud, right? So your data analytics program should also be constantly be amended to look for new fraud schemes or account for new fraud schemes. Otherwise, you're going to be looking at the same fraud schemes over and over when fraudsters have already moved on to the next thing and are no longer. So basically, you're looking for an act that is no longer being committed. So you should, that's what it helps to have those recurring, to be constantly doing fraud risk assessments, at least annually or more annually, more than annually, depending on the type of business you're in. Having your compliance folks and your legal folks, your finance folks, and your internal audit team brainstorm about, okay, where is the industry headed? Where do we see fraud occurring? How can that fraud occur in our organization? Okay, and how can we look for that? What tests can we develop in our data to identify these new types of fraud schemes that are occurring? So you have to be one step ahead of, or at least one step behind, or maybe in lockstep with the fraudsters to be able to identify fraud. Otherwise, you're having a data analytics program it will be useless at that point.
Thanks, Jamal. This has been very, very helpful to better understand the complexities, the dynamics, the opportunities, and as you were wrapping up in terms of the challenges that we may encounter as we incorporate data analytics into our work. So this has been very, very helpful, very enlightening, and I appreciate all of the examples that you have used. To our viewers, if you have any questions, be sure to enter them now in the chat panel on the right side of your screen. Before we get to the Q&A, I'd like to tell you about Audit Pro TV. Audit Pro TV is subscription-based, on-demand audit training that's effective and engaging. A one-year subscription costs less than a 3-day classroom course, and it allows you to gain access to the training you need at any time from anywhere. Visit acilearning.com to learn more about Audit Pro TV and get a free team trial. All right, Jamal, let's start with our first question. So Shehrazade submitted a question through LinkedIn, and the question reads, do you have any indicators to anticipate their risks? Do you have any indicators to anticipate their risks?
Well, I think that question is, it's kind of a broad question, but when you say the risk, I'm assuming you mean fraud risk. And I think that question is, it depends a lot on what fraud risk it is that you're looking for. So, we use the term fraud risk, maybe kind of loosely, but because fraud risk company can encompass a lot of different types of, there's a lot of different types of fraud out there. So there's a lot of different types of fraud risk out there, right? So when we say fraud risk, we need to first identify what type of fraud it is that we're talking about. So we might be talking about, let's say, the risk of money laundering, right, which is a type of fraud. So what are the risks out there that can that might indicate money laundering is going on? Is it the risk of structuring, right? Smurfing is another type of a risk. So, you have general fraud uh, that could be perpetrated in your organization, like such as theft from the organization, or maybe someone is dealing or engaging in kickbacks with customers. So yes, certainly those. There are risks there I'm sorry, there are indicators there that would help you identify that fraud. But again, a lot of that also depends upon what industry and what company, and a few different things. One is the company that you're working in, what industry it is in, what sort of practices that you have, what are your policies and procedures. So my point is that, when this question about having indicators to identify fraud risks, it's not one that you can just simply say there's not just set of 10 indicators that are going to identify fraud risk. There's a lot of other things that you have to consider, such as the organization, what the industry you're in, what are your policies and procedures. And then after you sit and understand all that, then you can say, okay, this is the type of fraud that could occur, and then these would be the indicators of that particular fraud risk.
Very good. Thank you very much, Jamal, for helping us with that. Another question from Olga. Can you give a practical example of connecting unstructured data with structured data within audit procedures? Can you give a practical example of connecting unstructured data with structured data within audit procedures?
Yeah, and I think I alluded to that in when I was going over the example. Like, so let's say that you're looking at you could do it, and I'll discuss it from both ends. Let's say you're looking at structured data first, and you've identified transactions that were potentially fraudulent, and so you look at now, you see that these transactions were originated by salesman X in the organization. So one of the things that you might want to do now is you can go into the system and pull out, let's say, all of salesman X transactions that occurred in the last quarter. Now, one of the things that you might want to do is go and look at the emails that salesman X look at his emails, because in U.S. companies, that email is the email is company property. Okay, so you can you might maybe want to do some searching of company X's emails to look for some of those search terms that do some sentiment analysis on that. Is salesman X offering any discounts, or is he appear to be engaging in any type of fraudulent behavior? So that's an example of looking at structured data first, and then looking at unstructured data to see if you can find evidence of fraud. And the opposite of that is true as well. You could start with looking at unstructured data, and maybe you're doing your sentiment analysis, and you uncover an example of or some conversations between two people where they appear to be talking about fraud. So now you can go into if you can depending on how much information you can pull out from that unstructured data, you might be able to go and look for transactions in the accounting, to find those transactions in the accounting system. I can tell you that I've done a number of investigations where I've done exactly that. You get a bunch of emails, there's an allegation of fraud, and you get a bunch of emails, and as you're reading the emails, you say, hey, these two people are talking about a particular transaction, or this employee of the company is talking with an outside party, and it appears that they're discussing a bribe. So you look at the time of the you look at the date of the emails, you see how much information you can pull, and then you go into the accounting system, and now you try to find a transaction that emanated or that was related to that particular email chain that you were looking at. So that's looking at it from looking at unstructured data first, and then going into the structured data to find it.
Wonderful. Thank you very much, Jamal. Question from Francisco. Is data analytics part of the internal activities of a company, or is it done by third-party auditors?
It could be both. So as I mentioned before, data analytics, the Department of Justice now expects companies, particularly public companies, to have some sort of data analytics program and testing component as part of their overall compliance program. So it's very important for companies to incorporate that internally now. And that can be overseen by the compliance department. It can always be seen by internal audit. But it should be exist in some format internally. But auditors also should be incorporating data analytics. I think and auditors historically have incorporated data analytics. It's the analytical procedures that the auditors have to do at the beginning and at the end of an audit, right? Those are essentially data analytics. Like typically auditors perform analytical procedures like ratio analysis. So that's an example of some sort of a data analytics. Maybe you'll do like a trend analysis. That's another example of data analytics. But so auditors should be using data analytics as well, more sophisticated forms of data analytics now, as well as the company internally also.
Very good. And your comment now speaks a bit to the next question that we have coming from Amado. Is saying, are there any entry-level positions to get into this area of IT? I would just perhaps get a running start on the answer and say that it's not necessarily an IT skill. It's really for general practitioners. But what do you say about Amado's question? Are there any entry-level positions to get into this area of IT?
Yeah, my experience has been that the short answer to the question is I would say yes, there are entry-level positions. I think the best data analytics the best data analytics program is something that combines IT knowledge or computer programming knowledge and software with subject matter expertise, right? So I say this in full disclosure that I am someone that has pretty good subject matter expertise, but I don't know how to program to take my subject matter expertise and put it into the format and program it into a computer. I need an IT person, someone that understands how to program. So I need to talk to them and say, okay, this is the type of fraud, okay, that could exist in the organization, and I have to explain that to them, and that person can then code that so that the machine can now be able to learn or identify what to look for. Right. So I have the skill of knowing on the fraud part. I just don't have the skill on the programming the computer part. Right. So, if you could find people that have both the subject matter expertise and the programming expertise, that would be amazing. You'd find an amazing person. But I think on the IT side, entry level, I think, yeah, there's plenty of if you have the ability to code and you understand languages, you should be able to, get a job, coding, and then looking and you're just simply taking, someone's subject matter expertise and transforming that into a rule that the computer can then look for.
So this is very, very good news and very encouraging response for Amado's benefit, because there are lots of opportunities within IT and beyond. It's a very multidisciplinary skill. How Janice's question, what is your experience and comments about privacy, more specifically reading emails and checking other information? What is your experience and comments about privacy?
So, in the United States, if you're doing an investigation or even a fraud, just doing a sort of a proactive fraud exam, there is at work, there is no expectation of privacy in the organization, right? If you're using the company's email, that is the company's property, not your own. Even if you're sending a personal email on the company's server, if you're using your personal Gmail account to send an email on the company server, that is going to be company property. So as fraud examiners, if we're looking into that, we have, because we're hired by the company, we can access that. Okay. I can tell you that in other countries, it's not the same. The expectations of privacy are a lot more stringent, more strict, particularly like Europe. Europe has, if you're looking at, depending on what type of data that you're asking for, it could be very difficult to get your hands on data. so for instance, we do a lot. If you want to, let's say that you go to the company and you're asking for, give me all these transactions, and I want to know who the third party was that you were dealing with, the name and the address of the third party to whom this payment went to. In certain countries in Europe, in practically all of Europe, they'll give you the payment information, but they're not going to give you the name and the address of the third party. Or they might give it to you, but it might take a bit of a legal battle because Europe has a heightened expectation of privacy for the individual. So when you get into, and obviously when you're doing an investigation or a fraud examination, it's not enough to know whether a payment was going out. You need to know, to get a complete sense of what of a complete picture. You need to know who the recipient of the payment was, so you can then conduct research or due diligence on that third party to see if they're a bad person or not. So the experience with privacy has been, depending on the jurisdiction and where you're working, it can be very difficult to get access to private what we call PII, personal identifiable information, and that can hinder an investigation. It can it can either bring it to a halt, or it can severely hamper it and lengthen the investigation, because now you're spending time arguing and over legal issues and whether private information can be released or not. So Europe is very difficult. I can tell you, Mexico and certain parts of South America are also very difficult to get private information and have the ability to read people's emails as well. But in the United States, it's fairly easy.
Okay, great. It's very important to understand the jurisdiction in which you're working and how laws may enable or constrain some of your procedures. Another one related to emails is from Manek. He's asking, do you have any red flags that we can look out for from emails? You just spoke a bit about that. Any other things? One thing that came to mind, for example, is information within the email, like keywords, like you were just describing, but maybe like a social security number or something like that. So do you have any red flags that we can look out for from emails?
And just like what we were talking about with transactional data, I think depending on the red flag that you're going to look for depends upon the situation that what it is that you're looking for, right? So if you're looking for trying to identify instances of, let's say, revenue recognition fraud, where a company might be overstating its revenues, then you're looking for certain terms, right? Terms like we had up on the slide: under the gun, pressure, make the numbers, words do or die, or things like that. So if you're looking to see if someone's committing bribe payments, then you're looking for a different set of terms. So the answer to my question is similar to how I answered the previous question about red flags. Is the red flags that you're going to be looking for in the emails or chat data or whatever unstructured data that you're looking at is largely dependent on what it is that you're looking for.
Great. Thank you very much. A question from Cecilia. We have a little bit of time left, but I would like to, if possible, take a look at some of these before we wrap up today. Can you give us a specific example of a test to do using Excel to illustrate your discussion? And she facilitates an example here, saying, looking for example, payroll overtime fraud.
Yeah. So Excel has a whole different set of features that you can use to identify fraudulent behavior. So one thing that you can do in Excel very quickly is there's the average function, right? The function that looks at a set of payments, let's say, in your example would be payroll payments, right? And you conduct an average to see what an average payment would be. Then you can once you determine what your average is, then maybe you want to look at payments that are 20% above the average or 10% above the average, whatever the case might be. Another example another feature that Excel has is the mod feature. The mod feature allows you to identify round dollar payments. So you'd be looking for payments at a payroll that are made in round dollar amounts. Sorting data is very simple. You can just simply sort data and look for payments that seem to be illogical. You can also do duplicate analysis. There's a function in Excel that, conditional formatting, that where you can identify potentially duplicate payments. So maybe you identify 2 paychecks going to the same person. You can compare expenses paid for one person to another person for the same type of trip. So let's say that you have 2 salespeople that are going on a trip to, let's say Miami, right? So you might want to look at, okay, are these 2 people incurring the same amount of expenses on their trip to Miami, or does one person, have more expenses? Is that one person's trip more expensive than the other person's trip? And maybe there's some payroll fraud going on in there. So there's a lot of features that you can do in Excel just by using the basic features of Excel. Mod feature, the average function, summarizing payroll data and comparing payments made to different parties, third parties, and so on.
Very good. Thank you so much, Jamal. This has been very helpful in terms of the presentation and then taking the time to answer a lot of the questions. There's one that was submitted from Joseph. Could you please recommend reliable and excellent courses or platforms to build skills in fraud detection using Excel? He's interested in building a career in this space or this sector. And we at ACI Learning, we have a lot of courses. We are continuously developing new ones and also providing webinars like this one and others that will be coming in the future. So Joseph, please be on the lookout. We have a lot of content already in place and more that will be coming. So we hope to be able to provide you with the skills that you're looking for. And to everyone, thank you very much for your questions, your participation, your attention. It's always good to have conversations with people like you, Jamal, so insightful, so knowledgeable. So thank you very much for your time. And to everyone, please stay tuned to the different programs that we have available and make available to everyone. And we hope that you will join us again in the future and be part of this learning experience that is so valuable for all of us. So thank you very much. See you soon.
Thank you.
Thank you for joining today's webinar. You will receive a link to the webinar recording delivered to your inbox. See you next time.